India's economy is set for a V-shaped recovery in the next financial year. After a 7.7% contraction this year, it will grow by 11%, making it one of the fastest growing major economies in the world. That is the big headline from the Economic Survey of 2021, presented by the Chief Economic Advisor, Krishnamurthy Subramanian, in the Parliament today. Hi, and welcome to this special live episode of Economics. We are talking to you within hours of the economic survey being presented in Parliament, and we will discuss it threadbare. I have Professor Ila Patnaik live with me, as you can see on the other screen. But before I do that, I will just go through the headlines, the big headlines from the economic survey very quickly. I already told you that we are set for 11% V-shaped recovery in the next financial year, and after that it will be 6.5% in the financial year 22-23, which means it will take about 2 years for the Indian economy to reach and cross the pre-pandemic level, which was about a year ago. And why is this economic survey important? It is a summary of what the Indian economy has gone through, the annual economic development in the year gone by, or the year which is going to end in 2 months, the fiscal year we are going through. So, and last, this fiscal year has been extremely traumatic, and we know about that. The other big headlines from the survey is that agriculture has been the silver lining. We know that services, manufacturing, construction were the worst hit, but revenue collection has begun to recover. Inflation is moderating, uh, and the chief economic advisor says healthcare has taken center stage of India's economic policy and planning, and he says finally with a exclamatory mark. So there is a big focus on health in the survey. And he says the government should go for a fresh asset quality review of banks after the end of COVID forbearances. That's one of the bigger headlines from uh, the economic survey. And the CEA also says, I mean, he's obviously supporting the farm reform laws. He says they are a remedy for the problems faced by the farming sector, and they will benefit farmers. Uh, Professor Ila Patnaik will talk more, but before that, I have one small request to make to you. The Indian economy will grow or recover with a V-shaped growth in the next year. We need to grow, as in we, as in the print, also need to grow. We also need to grow more than 11%. And for that, all of you viewers and readers who watch us need to pay so that we can continue to bring you the good journalism, the solid conversations and insights we do here. Forward economic survey with not too much, drama like we have seen in the past. Talks about just two parts. Talks about all the big fiscal economic numbers, and then talks about healthcare and the main social sector infrastructure issues. What were your first thoughts on this, Ina?
So I think the main message that comes out from the survey is that, especially in the first chapter, is that we did an early lockdown when we chose between lives and livelihoods. And we chose lives because once you save lives in a poor country like India, then livelihoods can recover because people are primarily, earning using their labor. And it really strongly, very strongly says that we did the right thing and that our policy choices have been vindicated, because despite the drawbacks, despite the weaknesses that we had, a very high population density, a very large number of elderly people, even though the share of elderly people in the population is small, but the absolute numbers are very, very large, despite the very weak health system that India has. It says that despite all that, the reason why we were able to uh, save lives and get onto a V-shaped recovery is because of the early lockdown. The CEA has also presented analysis where he shows that even in states, he develops an index of stringency for the lockdown, and shows that in states where the lockdown was more stringent, they did better. So they did better in terms of COVID. And that, I think that's the main theme. The other themes are, of course, so the second theme he talks about is that, does higher deficits or a high debt to GDP ratio give you higher growth? No, it doesn't. The causality is not that, the causality, he analyzes the relationship between debt and sustainable debt and GDP growth. And essentially, the message there is that you can have higher growth, you can go in for higher debt and get higher growth. It is not that by keeping your debt down, you will get higher growth. So keeping debt low does not give you higher growth. So that's the message in the second chapter that has been presented. In the next, he goes on to discuss how credit rating agencies are not rating India according to how we think it should be rated, that it does not reflect the probability of default of India's sovereign. And now similarly, going on to health and so on. But I think the main theme is the theme of how, uh, if I may say, he says how well and how well planned the lockdown and the policy was. I had this, my first thought, if I may share honestly with all my viewers here, is that I don't think we had that much time. I think we were sure there was a lot of uncertainty. And though I absolutely supported what was being done in terms of the early lockdown, and if you go back to the Economics weekly shows that, and by P and my conversations of the time, this was the expectation. But I think it does look, reading the survey, you might think that a lot of analysis and a lot of, as they say, crores of cases there were not crores of cases by March and April. So maybe a little bit, once you turn out to be right, it's kind of arguing that what we did was right because we knew we were going to be right and we thought it out. Of course, one is glad that this is what happened, that we did not lose as many lives as perhaps we were afraid, and that the economy has also uh, is bouncing back faster than we thought we would. For the next year, I think the predictions are quite optimistic. One of the things that seems to be missing from the whatever model that they have, that the ministry has used for making these predictions, seems to be, or at least there's not a detailed discussion of the financial sector, because the moratorium that was given, and which was correctly given, uh, did hit banks and financial firms. So I think, usually coming from a Ministry of Finance, where uh, the main job, the Department of Economic Affairs, where the main job of the Department of Economic Affairs is also to look at the financial sector and regulation, apart from these themes of inequality and growth and others that have been addressed. So that's what I would have looked for in volume one, where you are putting, where the CEA is putting out the key areas that the government has to look at in the coming year.
Thanks, Ila. Uh, simple, sharp question, the same question we have posed in the thumbnail of the video we are, live. Has India turned the corner? Does the survey indicate that?
The survey does say that India has turned the corner. I would just say that we should still be careful.
Mhm.
Because while what we are projecting and what we are seeing now has both a lot of pent up demand and optimism which is coming from the vaccine. But for the economy to pick up, I think the financial sector needs to be healthy. And I would have, yes, the survey does say that we've turned the corner. I think we have, but I think that turning the corner will depend on how you deal with problems in the financial sector in the coming years. So when we go back to pre-COVID levels in the next 2 years, as the survey says will we get back to a healthy financial sector as well, so that we can continue our growth or not? I think that would be my little qualification.
We had this small conversation before we went live, and I asked you, does this give an indication of the kind of budget we might expect on Monday?
Um, so, from my experience in the Ministry of Finance, we worked in two separate teams, really, more or less. I mean, the team that prepared the budget and the team that prepared the economic survey were two separate teams. Of course, the CA will have the privilege of being part of some of the meetings that are held for preparing the budget as well. But usually, the economics, looking back at the last 20 years, also the economic survey does not give an indication of what we will see in the budget. It doesn't
Uh,
usually do so.
I I'm asking our viewers to send questions. We already have a few questions, and before we take the first question, a last point from me, Ila. The focus on healthcare and the CA saying that healthcare has finally taken center stage. Uh, your thoughts on that? Because everybody's expectation is, again, the budget will make some very big announcements about investments and programs in the health sector, and that is obviously natural because of COVID and the pandemic and how we manage the pandemic, and also the vaccination program that has just been launched.
Yeah, I think it is something that will have to come center stage because of COVID and with the rising expenditure and the vaccine expenditure. But I still feel that the fundamental problems with the health sector, the lack of regulation in the health sector, the lack of regulation of the private health sector in particular, the kind of difficulties we see even in trying to check if the doctor you go to is registered or not. I mean, those are some very, very, simple regulatory issues that can be resolved without even a large amount of expenditure. And I think we do need to resolve issues about regulation of health and regulation of insurance, both, before we are going to jump into the world's largest health insurance schemes. So I hope to see more of that and not simply an increase in expenditure and pushing it through the same broken system that we already have.
Mhm. Mhm. Thanks, Ila. I'll take the first question. This question actually came before we went live. It came from one moment. Let me get the name right. Uh, it came from Rupesh Patil, and it was posed during our earlier live by my colleague Ruhi Tiwari on government matters. We have a show called Government Matters, in which Rupesh asked, and I think you've already answered part of that question. What is your opinion on the economic survey? You answered that question, Ila. Uh, his second part of the question, Rupesh's second part of the question is the survey much too optimistic than the reality of the Indian economy?
So I think maybe I've answered that also partly
Mhm.
in terms
Mhm.
of the state of the financial sector, which is yet to be revealed and not adequately discussed. Because I do think that, yes, we can do well and the economy can recover, but it does matter how we deal with issues in the financial sector, how we deal with issues in the health sector. So it's, it's not an unconditional recovery. Obviously, it'll depend on the kind of policies we adopt.
Mhm, mhm. Uh, we have this question on the PMJAY, that is the Pradhan Mantri Jan Arogya Yojana. I'm sorry, I have not got the name of the person who's asked this question. I'm asking my colleague who's feeding me questions to send me the names of people who have also asked the questions. My apologies for that. What has been the impact of PMJAY on health outcomes according to the Economic Survey?
So I haven't looked in detail at the impact of. I think that's in chapter 4 or 5. Maybe we, if we do a detailed deep dive into all the chapters of the survey, then we can discuss that next week.
Uh,
YP, since you've had a chance to read the survey in greater detail, you perhaps got an early copy. So maybe you could answer that question if.
I'm sorry, Elon. I mean, I did go in. It's
Ah,
voluminous, as you know. We
yeah,
all know
yeah,
the
yeah,
survey is very, very voluminous. So the health part had to be, rushed through, and which
yeah.
is uh, some
Yeah,
of the.
so I think for the factual questions, it'll be a good idea if people could just pull up the survey. Uh,
Yeah, I hope you can do that. This is a question which is again. I mean, the CA has also addressed this. Eli, the question is India simple, straightforward? Is India's debt sustainable?
Currently, yes, it appears that our debt is very much sustainable. We do not have a growing debt to GDP ratio. We have been fiscally prudent for many, many years, and I think that's even when in years where we have slipped, we've kind of come back. And second is because we have a high growth rate. And as students of economics would understand, that it is the difference between the interest rate and the growth rate, that you could look at them both in real terms or both in nominal terms. So the nominal interest rate minus and the nominal growth rate, and as long as the nominal growth rate is higher than the nominal interest rate, you can imagine that the debt to GDP ratio will remain sustainable, also keeping in mind what you borrow each year. So if each year you borrow in a limited amount, as we have been doing, bound down by the FRBM, and then if GDP is growing at G and debt is growing at I, the G being the growth rate and I being the interest rate, then as long as G is greater than I, your debt will be sustainable. And I think that the chapter in the Eco Survey, which is on the Ministry of Finance website now, does a good analysis of this debt sustainability condition.
That question, by the way, was from Fawad. Thanks, Fawad. Thanks for that question. And I'm sorry we couldn't get your name before we asked the question. The next question is from, it just says Mohammed, the name of the questioner. And Mohammed is asking that did the economic survey give any useful information about India's labor reforms?
Not in the first few chapters that I was able to catch so far. But I haven't looked at volume 2, and I'm sure volume 2 will have that. So I think you should, go to volume 2 of the survey and check that out, because usually there's a chapter on the social sector, and the Ministry of Labor does give inputs to the DEA on that chapter. So that should be there.
Mhm. Uh, Tanya has a very more general question, Ila. Do India's fiscal rules need a rethink?
You see, we've been thinking and rethinking about fiscal rules for a long time. I think the problem lies in the fact that these can be changed by a mere footnote. In the budget, what happens is that when you present this report about how you have complied with fiscal rules or not, you can actually change that, what the rule is going to be, and uh, what you plan to do, by a mere footnote in that. As long as that is the case, it's not binding, which is why I would say that instead of focusing on changing fiscal rules, which is what we've been doing, all the way since 2003, 4, when we started discussing FRBM, and when we started saying, well, should these be countercyclical fiscal rules? Should there be a glide path? Should there be rules which allow you to deviate in periods of distress and so on? Or should we have fiscal surpluses in good years, actually? So there can be a lot of discussion on the rules, but I think our problem is elsewhere. And that is why the discussion on this has been really twofold: that how do you get the government to actually find those rules binding? One of the proposals is to have a fiscal council, and that the fiscal council should be an independent body that looks at fiscal rules. The Finance Commission has also recommended that. Another proposal that's been around for many years is to have a independent debt management office, PDMA, which would then also be looking at what the government is doing. And when it goes into the bond market actually gives it a message. Today we don't have a proper bond market, and so it's not enough to have fiscal rules, even if they were much better than what they are now. Though, of course, you can keep debating about fiscal rules. That's something that we will continue to do within our FRBM framework. But I think better institutions, a fiscal council, a PDMA, a bond market are required in addition to good fiscal rules.
This is a question I've got from Rajiv on Twitter. Thanks, Rajiv. Thanks for your question. Uh, should lending be made more readily and easily available for new businesses and alike? And I also want to, apologize to any of our viewers who might think it's impolite that I'm putting my head down and looking down while Eli is talking, because I'm just scanning the questions so that I can take questions which are being sent on my mobile phone. Sorry, Ila. So, should lending be made more readily and easily available for new businesses and like?
So, if you are thinking of a system in which there is a central planner or a government which directs banks to give people's money to a new business at a certain rate, an old business at a certain rate, a business in a particular industry at a certain rate, a loan of a certain tenor at a certain rate, I think that is not the kind of financial system where such proposals can be made. I think that's not the kind of financial system that would give growth to India, that would actually even allow young, new industries, companies to borrow. Because what happens in a system like that, which is what we have today, where I'm kind of uh, looking at the assumptions behind this question. The assumptions are that we'll have a public sector dominated banking system, and banks will be told, loss or risk, don't worry about the loss or the risk you have, you lend uh, at such and such a rate. So I think what we should be thinking about is, how can we build a more competitive financial system where banks actually study the risk and return of uh, the companies who want to borrow from them, and give them loans based on their understanding of the risk, and the based on their understanding of risk. And if they think that yes, this business is doable, yes, this business can do well, is not very risky, they might give out a loan at a lower interest rate. Whereas if they think it's very, very risky, would we say that depositors' money should go to such businesses, even if they are very, very risky? Because after all, it's your and my money that is going in. So I think we need to think not of a directed credit system where we can say what sort of interest rate should somebody be lent at, but we should think about a more competitive banking system where, if there is easier entry and exit, and if there are lenders who want to lend based on the uh, company and its business, then good companies, young companies should be able to get credit at lower rates.
The next question, Ela, is from Garvit Gilotra. And this is something I think we discussed and you wrote about also in your column. Garvit is asking, will the finance minister be transparent with numbers because tax collection will be less this year? And after April, companies will start to go bankrupt because the forbearance period will have ended. So does the government have a long-term policy or does the policy keep changing here?
On the transparency.
On transparency and also dealing with bankruptcy.
So I think let me answer with the first question, which is on the budget. That this is an opportunity for the finance minister to actually be transparent about fiscal deficit. In previous years, the CAG has pointed out that the deficit was 1.5 to 2% higher than what the government had estimated it to be, even in the revised estimates, even in the actual estimates. So not just there are three estimates. One is the budget estimate, then the following year the revised estimate comes, and then the year after that the actual budget figures come. So the CAG had said that government had actually done spending such a subsidy by raising money through PSUs, and that the budget deficit was or the fiscal deficit was higher than what the government said it was. Now, I think this is one year when it can afford to actually be transparent about its actual level of deficit, because then it can satisfy all the critics who have been saying the government hasn't spent enough and hasn't borrowed enough. Spent enough is, when you want an expansionary budget, then you don't spend more by taxing more. You spend more by borrowing more. You want to have a higher fiscal deficit because you want the budget to be expansionary. So this year, the government can actually say, hey, look, I've spent like 2% more. And that will be showing the true deficit, which it used to hide in previous years. And that's the argument for saying that this year the government can be much more transparent. I hope that finance minister does that this time, and that this also sets a path for future higher transparency in budget making, and not having off budget borrowing, which is mainly through PSUs that it gets done, or FCI bonds or ONGC bonds, or some other way of hiding the deficit. So that's on that. Now, I think on the question of bankruptcy, uh, we have not yet seen even before this bout of which we are going to see a large bout of a large number of firms becoming bankrupt. Even before that, I don't think the bankruptcy courts were working as well as, and the mechanism was working as well as one had hoped it would. I mean, look at what happened to the February 12th circular of the RBI, where you know pretty much so it had withdrawn all earlier restructuring schemes and said that you need to take bad loans to bankruptcy, but then it had to go back on that. So I think we have a long way to go before the long term solution is found and the bankruptcy mechanism is made to work much better.
We have about another 5 minutes, Ela, so we'll try and take as many questions as possible because we still have so many, viewers sending us questions, and I'd like to really thank them. The next one is from Suresh. Should fiscal policy support growth until the pre-COVID growth path is achieved again?
I think that is the intent, and yes, it should, because currently we all understand that this is a bad time, and at a bad time you do want uh, that you should be able to use the instruments in your hand. Macroeconomic instruments are monetary policy, fiscal policy. You should be able to use them and support growth. So I think that that is something that we should expect to see in this budget.
Then there is a question from one moment, please. Keshav M. Keshav M says one of the policy implications in the CEA's report is on rating methodologies and the sovereign rating by various agencies which do that. And he said rating methodology needs correction as they affect FPI flows mechanically. What are your
Yeah, so there are two questions that have been dealt with in this chapter. One is, is India's credit rating in line with fundamentals? And the analysis seems to suggest that no, even though we have not defaulted, even though we have lower levels of inflation, high levels of GDP, when fifth largest economy in the world, we have adherence to fiscal rules. We have more rule of law than many other countries which have better rating than us. Then we find that our credit ratings are not in line with sovereign credit ratings, are not in line with what we expect. This has been a question discussed with rating agencies for the last 4, 5, 6 years, actually, that every time rating agencies come, so India doesn't borrow, the India government of India, okay, does not have a sovereign borrowing program. It does not go into international money markets and borrow in dollars. The borrowing that gets done is done through, let's say, SBI borrowing, which would be uh, mm, partly, I mean, as close to sovereign borrowing as you can expect. So when rating gets done, it's actually not exactly our dollar denominated sovereign borrowing. On rupee borrowing, which is domestic borrowing, the government of India need not ever default. So that's one question. What are you rating? Who are you rating? Okay, when you do India's sovereign rating, because we don't actually have a sovereign borrowing program, a sovereign dollar borrowing program abroad. The second question that has been irking the government is that many of the countries that uh, have better rating than us are seen to be very volatile. They have, at least in our perception, higher probability of default. And the government has often raised this question with rating agencies uh, about why is it that they have better rating than us. So I was kind of surprised to see that this was discussed in the economic survey, because it's like now an open war, basically, that whatever you're rating us is not right. Uh, then the question is, who gets affected by this rating? It is largely put for institutional investors. So, in the FPI category, the foreign portfolio investors, the institutional investors, like pension funds, who who make commitments to their clients that they would invest money in a certain investment grade or a AAA category, or they make commitments to their clients that this is the kind of rated uh, uh, funds that we will invest in. Now, when India's rating goes down, then many of them, because of the criteria that they adopt, they pull money out of India. And that is why we get unhappy that this rating, which is done not as we think it should be done, then affects our economy. It affects stock markets when FPIs pull money out. It makes the rupee more volatile because suddenly you have money sloshing in and out because of Moody's or S&P or Fitch or one of the other rating agencies rating India badly for some perception. So that's the discussion on this issue.
Shefali Sharma has a very simple question. The survey says farm sector reforms are overdue and it will help create one India, one market. Was this statement something that you guys expected? I definitely would have expected that kind of a statement. What?
Absolutely, absolutely. You see, the farm sector reforms that have been done have been talked about, and I think the Eco Survey has a chart, very long one, in fact, about the uh, number of committees that have recommended reform, including this reform, a large number of government reports, and so on, that have actually uh, said that these are the reforms that need to be done. Now, at a time when there are protests against those, I think it is the job of the CEA to bring out what the government wanted to do, what it was trying to do, and explain to people that this is not something that was pulled out of the hat, but these reforms were based on proposals that have been made for many, many years, including by the Congress government, which is now by the Congress when in government, which is now opposing those.
We will end the show with this last question, Ela, which sort of questions the whole philosophy of doing economic surveys. This is come on Twitter from someone who identifies himself or herself as Shanky. Thank you for your question, Shanky. Do economic surveys make any sense? None of the steps suggested are ever taken by governments. Should they not be discontinued? I mean, this tradition of unveiling economic survey every year with so much noise, and then the government doesn't do anything that is recommended. It's more like so many of those, government committees which give reports and then nothing happens and everything is forgotten.
I'm not too averse to that idea, actually, because of scrapping it. I think that the economic survey, the role of the economic, in its present form, so the role of the economic survey till the 2015 survey, so up until the last survey of 2013-14, the survey and its role was that it would put in one place the developments in the economy in the last 1 year. Now, after that, the survey has changed into this new format, which includes uh, views of the CEA on various issues that the CEA feels strongly about. And I think to some extent, it confuses people because these are neither the views of the government nor are they research papers that are put out, are published in journals. So, it's that instead of putting out research in Lancet, so we recently saw Covaxin research on Lancet. Instead of that, if you just published your own little article, little magazine, and you put it out on that, and then you said, "Look, we've done very well." So the point I'm making is that the credibility of that research actually goes down. So you see a large number of research articles. I was even surprised to see a regression table on the in the survey this time, and common people don't understand it. So if it is something that requires expertise, then one would rather see research papers published in peer reviewed, refereed journals, and you
Mhm.
could always refer to them. But if they're not the view of the government, if they're only the view of the CEA, and that they are research papers, and the credibility is not you say I'm doing well, and here is how I draw a figure and I show you how I'm doing well, then it should be something that is coming from an independent source. So, in OECD countries, uh, the countries don't publish their own economic surveys. Governments don't publish their own economic surveys. The OECD publishes, say, in an India economic, a UK, or French or German economic survey. So you have a bit of an independent observer commenting on how the economy behaved. I would like to see the old format come in, if as long as we feel that, oh, we still need everything in one place, how the economy did, various data, and most of it, almost all of it, is public data. Hardly any of it is any new data. So most of it is data that's already available. So when you talked about how GDP did, when you talk about how agriculture did, those are CSO produced figures, and we already know them. So yes, this is an interesting thought, and we should discuss it.
My supplementary to that, Ela, is that do you think it would be a good idea if the RBI made a, produce a report like this?
RBI already does.
Yeah.
It
No,
already does. In
economics
fact,
survey just
huh,
before the budget.
so well, doesn't matter if it's before the budget or not. You see, we get quarterly GDP data. We get so. I think what matters is how independent is it, and the credibility goes up when it is not coming. So the tradition of the survey goes back to 5051, when you did not have data freely available, when there was no internet, when we would go looking for to prepare our Indian economy third year exam. We would
Mhm.
go looking in the library for the last year's economic survey, or while wanting to understand, wanting to write about something. There weren't many sources of information. Now that's why I'm saying it's not that every country does that. OECD countries have moved away from this, where the government is publishing something like this, and here it's not even the government publishing, because the government almost says that the views expressed in the first volume, this is not the agenda either of the government or of the ruling party. It's more like a research, almost a research sort of questions, and research, new non-peer reviewed, non-independent research being presented. So it needs to be rethought.
Needs to be rethought. That's the big thought at the end of our long discussion on the Economic Survey 2021 presented this morning to Parliament. Thank you so much for watching this special live episode. But we have another special live episode coming on Monday, because that is the day when Finance Minister Nirmala Sitharaman will present her budget. Uh, One of a kind budget she has promised, and we will try and bring you one of a kind Economics after that within an hour or so of the budget being present. So we'll make that announcement on Monday morning. Please send us your questions. Please watch us live, and we will be back on Monday afternoon. Thank you very much.